Why is this short squeeze different than the 42 others you've known since you joined Goldman Sachs?
Well, the market is very different because things are happening much more quickly. There's just no stabilizers. When I came to Wall Street 55 years ago, the brokerage firms traded stock for 25 to 50 cents a share. The Volcker rule didn't exist. They had an incentive to stabilize and go against the trend. That doesn't exist anymore. 80% of the volume used to be the New York Stock Exchange. 80% of the volume is off board. The specialists don't play a role. And then for some unexplained reason, the SEC eliminated the Uptick rule in 2007, was something that functioned very well since 1948.
Leon, I don't want to interrupt, but that's right where I wanted to go. Okay, Arthur Levitt and others, full disclosure, Mr. Levitt's a Bloomberg board member. Arthur Levitt and others took us from quarter point responsibility down to the rush of the decimalization, and then we had the Uptick rule changed. Explain why the Uptick rule was so important.
Well, you added stability to the market. You needed an uptick. You just could not. I think the elimination of the Uptick rule gave rise to these high-frequency, algorithmic traders. And they know nothing about value. They know everything about price. So they exacerbate the trend. When the market's going up, they accelerate the up and move. When it's going down, they accelerate the down move. And I think the SEC should they've been very mindful of the cost of trading, but they've not looked at with lowering the cost of trading, what impact it's had on the market. And I think that we should try to slow things down a little bit and reinstate the Uptick rule.
Charles Cantor of Neuberger Berman was on the other day and made very clear his break is a responsible short interest. Leon Cooperman, is one path here to restrict the size of the short interest to not only protect investors, but just to put a brake on all that high-speed market?
No, I would say that we should just follow the rules that exist. I mean, if you're short something, you have to secure a borrow. Okay, if you can't have a borrow, you shouldn't be short. So to the extent that somebody's short more than 100% of the market cap of a company, it's because the rules have not been followed.
Right.
Leon, was there anything to admire from the events of several weeks ago?
Anything to admire? Well, the system has survived, but no. I would say. It's not, look, the Wall Street ethics has been in a decline for quite some time. Many, many years ago, I confronted the then head of the New York Stock Exchange. I asked him why they allowed these algorithmic guys to co-locate their computers next to the New York Stock Exchange to give them a split-second advance over the public. It just doesn't seem to be right. And his response was, well, if we don't do it, somebody else will. Okay? The sale of order flow raises questions in terms of whether the public's orders are being abused. Well, I think that there's a lot of things the SEC could be doing, and the last thing we need is Elizabeth Warren or Bernie Sanders or AOC getting involved in setting policy. The rules and the regulations exist; they're in place. Just follow them.
Well, as you know, Leon, a lot of people have characterized this as the wealthy versus the poor, David versus Goliath. How unhelpful do you think that is right now?
I think that's all baloney. This persistent attack of the wealthy. I mean, Melvin lost a lot of money. I suspect that he's a very wealthy guy, the fellow that runs Melvin Capital. So I don't think it's a battle against the wealthy and the poor. I think America as a country became great because poor people want to aspire to become wealthy, not because they basically had a negative view of the wealthy. And how do you become wealthy in America? You become wealthy in America because you develop a product or service that somebody needs, and you get richly rewarded. And the people who have their heads screwed on correctly then share that success with others less fortunate. Is the world better off or worse off because of Bill Gates, Jeff Bezos, and a host of other people? I've said on your program or other programs, Ken Langone is one of the finest human beings I've ever met. Okay, well, Ken staked Bernie Marcus. I think he raised him something like 50 families put up $2 million each. They raised $10 million. And I don't know, the enterprise value today is probably $275 billion. They have several thousand employees that are millionaires. Bernie and Ken have given back billions of dollars to society. That's the American dream.
Well, how does the Fed factor into the American dream? Because the American dream increasingly has been people with assets have continued to see their wealth grow dramatically under the Fed's regime versus those who don't have assets, which have missed out.
Look, this goes back. We have had some, I'm not a big bull in the market presently, I understand exactly what's going on, basically, but we've had the government providing some type of life support to the economy and the market since 2008. 2008, Mr. Bernanke figured out the economy was going down the toilet. He had to reverse that. He said the best way to reverse that is to create wealth, the so-called Pagou effect, 5% of wealth changes work its way to consumption. And the best way to get wealth up is to get the stock market up. The trouble with it is 80% of the stocks are owned by 20% of the people. Not that they did the wrong thing, they did the right thing, okay? And then they spent the next 10 years taking away the wealth that was created from the wealthy by creating an environment where there's no return on savings. So if you led a prudent life in 2008 and you didn't get caught in a big way and you had savings, if you tax adjust and inflation adjust your return on savings, it's negative, okay? And now they want to get another bite at the apple. We are following, it's very clear what's going on in the country right now. Unemployment pre-COVID was like 5.7 million people unemployed. That ballooned to over 23 million.
Yeah.
That's now down to about a bit over 10 million. And they're conducting monetary and fiscal policy. Not saying it's wrong, but there's a price to be paid for this long term. They're conducting policy with the idea of getting the unemployment back to where it was pre-COVID. Okay, and that's everything they're doing. So just look at the world. We've injected $1 trillion more in stimulus in the way of transfer payments into the economy than income that has been lost. Plus, we're talking about another $1.9 trillion. Okay, we took 245 years for this country to go from zero national debt to 21 or 22 trillion. That's going up $3 trillion a year. That's not a sustainable situation. It's a price to be paid for that.
Leon, what is the consequence? Is it runaway inflation? Is it markets that are going to get overheated and blow up?
I don't know the answer. It could be inflation or deflation. I just know it's not going to be a good end. And I don't know when it ends, but it's not going to be a good end to the game. It's not going to be a good end. Just think of it this way. If you speak to 100 economists, and Mr. Keene is a damn good economist of his own, you speak to 100 economists today, and you ask them, what is the trend real growth in the economy? Trend real growth. They would say the economy's potential to grow in real terms is about 2%. 1.5% productivity, 50 basis points from labor force growth, that's 2%. And another 2% for inflation, that's 4% nominal GDP growth. Okay, this year the economy is expected to grow 6%. It's growing in real terms. It's growing a 3 times trend, yet we have 0 interest rates. Doesn't make any sense. It's being the policy, and I resent Mr. Powell in one respect. Let him call it for what it is.
Leon, look, I want to get back, just because we're running out of time, I want to get back to what we're talking about here. Michael Lewis wrote a book about the Flash Boys. We've got to do something to get us away from the cult of high-speed trading. What is your policy prescription for Mr. Gensler to get us somewhere back to where value is worshipped like price?
Pull out of the files a letter I sent to Jay Clinton in December 2018 recommending reinstating the Uptick rule. That will slow the process down. I see no downside risk to doing that, and it would basically add some stability to the system. There are no stabilizers, up or down, and that's not a good thing for the market.
Who is lobbying for those people? I mean, who is representing them against people of the high-speed industry, and I'm going to say including Mr. Griffin?
I honestly don't know. I'm really an old-fashioned investor. I buy stocks one at a time. I'm a value guy. I buy things.
What's your single best buy right now? Pharaoh's got to make some money. What's your single best buy?
It's a little complicated, but my single best idea, which should be my largest position, right, is a company called Legato. Legato owns somewhere between 35 and 40 megahertz of spectrum, 5G spectrum, which got caught up in some controversy because the Department of Defense very bogusly objected to their spectrum use because they said interfere with DoD needs. Complete baloney. The FCC did a fabulous job under Chairman Pai, studied this for over 5 years, and by a 5-0 bipartisan vote,
there you go. John, Legato, Legato, it's Italian.